82% of retail traders, everyday people trading their own money, lose, and most of them know why. Look at this. You're watching your screen. The S&P 500, the index tracking America's 500 biggest companies, just slipped below support, a price level where buyers usually step in. Your gut screams sell. Your discipline whispers wait. What's interesting, this isn't about predicting charts. It's about following your own rules when everything around you feels like chaos. The real edge isn't guessing where the market goes. It's managing yourself when the market tests you. But here's what most people miss. Why does discipline feel like juggling? Imagine you're holding 3 balls labeled strategy, emotion, and risk. Keep them all in balance and you're in control. Let one drop and everything goes off track. Trading is no different. It's a constant balancing act where discipline is your secret sauce. Picture this. You're looking at the S&P 500 daily chart. The market is dipping, flirting with key support levels. Your strategy tells you to hold on, but your emotions are screaming to sell. It's like watching a juggler keeping those balls in motion. Every decision you make has to be in harmony with your plan. If you deviate, even for a moment, you could drop the ball. Discipline in trading is about sticking to your strategy when emotions are running high. It's not just about having a plan, it's about executing it under pressure. Think of it like a rock climber who knows every step and hold. They don't panic when the wind picks up, they trust their training and stick to the route. But what makes discipline so elusive? It's the human element. We're wired to react to fear and greed. When a trade goes south, the instinct is to cut and run, but discipline reminds you to assess the situation logically. Does this trade align with your risk tolerance? Are you sticking to your risk/reward ratio? How much you can lose versus how much you can make? The key to mastering discipline is practice. Like any skill, the more you work at it, the better you become. Start by setting small, achievable rules for yourself. Maybe it's a simple rule like not making a trade before 10 a.m., or always reviewing your trades at the end of the day. These habits build the muscle memory needed to stay disciplined when it matters most. So next time you're in the market, remember the juggler. Keep your strategy, emotion, and risk in balance. It's not just about having the right plan. It's about having the ability to follow it, no matter what the market throws your way. You're sitting at your desk, staring at the charts. A red candle inches lower on the S&P 500 chart, testing your patience and your plan. This is the moment where traders are made or broken, not by the market, but by their response to it. Imagine you've mapped out your strategy in advance. You know your entry points, your exits, and your stop loss, a preset price where you automatically get out of a losing trade. But then the market moves against you. The temptation to react emotionally is strong. Yet this is where discipline steps in as your true edge. Let's break it down into 3 actionable steps. Plan, execute, reflect. First, planning isn't just about predicting market moves. It's about preparing for any scenario. Ask yourself, what's my exit plan if it goes south? Have a stop loss in place and decide your position sizing, how much money you put into any single trade before you even think about entering. Next, we execute. This is where your pre-planned strategy meets the live market. Discipline means sticking to your plan regardless of what the market throws at you. If your stop loss gets hit, accept it. It's part of the process. Remember, each trade is just one in a series. Your job is to focus on the process, not the outcome of a single trade. Finally, reflect. After each trading session, take a moment to review your actions. Did you follow your plan? What emotions came up, and how did you handle them? Reflection is crucial for refining your strategy and strengthening your discipline. The market is unpredictable, but your actions don't have to be. Discipline not only prevents knee-jerk reactions, but also builds confidence over time. So what will you do the next time the market tests you? Will you react, or will you act? Still with me? Here's the part that trips up most traders. Picture 2 traders. The first one reviews their plan. They wait calmly for their setup. They act only when the market matches what they're looking for. The second trader watches the same market, but they're anxious, glued to the screen, making calls on every tick. This isn't about personality. It's about what discipline does to your results. Start with the disciplined trader. They have a plan. It tells them when to enter, how much to risk, and where to exit. That's their edge, a structured approach that cuts emotional reactions and keeps them focused on the long game. Now the emotional trader. No solid plan, so every market wiggle pushes them around. Price drops? Panic. Instead of following a strategy, they react. They buy high out of FOMO, fear of missing out. They sell low in a wave of panic. That's emotional trading. Decisions driven by fear, excitement, or ego. The disciplined trader knows not every day wins. They're ready for that. They use stop losses, a preset price where you automatically exit a losing trade, and position sizing to manage risk. The emotional trader ignores those safeguards in the moment. Losses get bigger than they need to be. This isn't just theory. The stats back it up. Disciplined traders consistently come out ahead because they manage risk and stick to their strategy. So which trader do you want to be? The one the market jerks around, or the one who handles the chaos calmly? The pattern is clear. When emotions run high, discipline is everything. The goal is making it second nature. But what if you could add one simple habit that stops emotional trading before it starts? That's the pre-trade pause. Your phone buzzes at 10:15 a.m. The S&P 500 just dipped below a key support level. That triggered your $500 stop loss. You watch the order fill. Your position closes automatically. Now you're standing at a crossroads. Discipline in trading isn't just about setting stop losses. It's about respecting them when they hit. You planned this trade. You expected the dip. You set your risk. The market moved against you anyway. The instinct? Jump back in. Make it back right away. But here's where discipline becomes your real edge. Picture it. You're at your desk, tracking red candlesticks, the bars that show price dropping. The loss stings, not just in dollars, but in the confidence you had in your thesis, your specific reason for taking the trade. This is the moment that separates disciplined traders from emotional ones. You already decided your exit before you entered. You followed rules built to protect your capital. The market is unpredictable. Your response is your choice. You could revenge trade, take a bigger, sloppier position to claw the money back fast. Traders call this emotional trading, trades driven by fear, ego, or frustration, not a plan. But you've learned to pause instead. With the stop-loss hit, you step away from your screen. A 15-minute break can feel like forever. It's a key part of the pre-trade pause framework, a habit that keeps your next move from being fueled by emotion. The pause isn't just time away, it's about regaining perspective, reassessing your strategy, making sure your next trade is based on logic, not frustration. The market will always be there. Your capital won't if you let emotions run the show. By respecting your stop loss, you showed the core principle most traders miss. Controlling your response to loss is what keeps you in the game. So sip your coffee, recalibrate. Every trade is a lesson in discipline. It's not about winning every time. It's about managing risk and protecting your bankroll, the pool of money you can lose without blowing up your life. This scenario, repeated in different forms, is the backbone of successful trading. You won't avoid losses. Losses are part of the path. The point is following your own rules consistently. And discipline, it compounds like interest. The more you practice it, the more natural it feels. The more resilient you get against the market's emotional swings. Here's why it works. Discipline isn't just a skill. It's the edge between traders who last and traders who fall to their impulses. As you think about this scenario, ask yourself, what rules are you willing to stick by, even when the market tests you? That commitment is what shapes great traders. Here's what unfolds. You're about to trade right after a losing streak. Your emotions are high. The urge to jump back in is strong. But what if the best move is no move at all? Meet the pre-trade pause, a simple discipline rule with a big impact. Here's how it works. After any losing trade, take a mandatory 15-minute break before the next one. Step away from your screen. Grab a coffee. Clear your head. Why? Because that pause is your defense against emotional trading, making decisions from fear or excitement instead of a solid plan. Track this for a month, and you'll see the real power of the pause. Compare trades you made within 15 minutes of a loss to trades you made after a break. You'll likely see a big jump in your win rate, a percentage of trades that made money when your mind was calm. If this helps you, subscribe for more insights every week. This small pause helps you regain control. Discipline guides the decision, not emotion. So next time you're about to react on impulse, remember, a short break can build a long-term edge. The pattern is clear though, most traders skip it. Trading is a journey. Every insight you pick up adds another tool to your kit. Want to sharpen your skills and build real discipline into how you trade? Subscribe for fresh perspectives every week. Maybe the market is chopping right now. Maybe you're reviewing trades that didn't go your way. Either way, we're here with practical advice you can actually use. What's interesting? Discipline is a skill, not a personality trait. Hit subscribe and let's walk that path together.